Welcome to this podcast realized within the Cross EU VBA project. We have the pleasure to welcome Mr. Slavomir Hruška, who is both an employee of Investiers managing the Fund of Innovation and Technologies and the founder of Localization Guru. The topic today that we will be discussing is Introduction to Angel Investing. So hi Slavo.
Hi Miro, thanks for having me today.
It's always a pleasure to have you here. Please, could you tell us something more about the angel investing? What is angel investing?
Angel investing is one of the early phases of investing in a startup. You know how they say you have the three F's: friends, fools, and family. Like the angel investors are one step after this, where they invest in early stage companies based on their experience, also like ideally in the industry, but really it's the how would I say the early crazy people who believe in the idea and like the idea and want to help the founders to realize that idea.
Okay, so those were some words about angel investing, but also about angel investors and what they do. Yeah, and what are the advantages and the disadvantages of being an angel investor?
So the advantage of being an angel investor is that you get in a company at an early stage. So basically you invest the first risk capital, which means also you get more shares from the company. And basically the advantage is also a disadvantage because you take a huge risk because at the beginning most of the companies they invest in, they don't have a clear business model. They don't know what's awaiting them, maybe also depending on the synergies and of the team, and those are just like some factors. But also like there is a million other reasons why a company can work and cannot work at an early stage of investment. And this is one of the risks, or I would say the greatest part of the risk that the angel investors take.
Mm-hmm. So then what is a typical angel investment process?
Basically, if we would divide it into different stages, so let's say in stage one, the angel investors are sourcing for deals. It might be proactive or reactive, depending if they are in a syndicate or they are alone. And most of deal sourcing comes through members if they are in a syndicate network or interactions with other players in the ecosystem, which might be corporate companies, venture capital companies, incubators, accelerators, and different organizations that support entrepreneurship. After this, there is obviously some deal screening. Depends if you are in the syndicate, then you probably have some kind of CRM system where you can everybody can comment on the deals. If you are basically alone, then you just look at the deals. Probably if you have some advisors in this sector or you know your sector yourself, then you do the screening on your own. Then the next stage would be some initial feedback and coaching. Companies usually passing the initial screening will be contracted and may receive some coaching regarding the expectations of the investors and how to better present the company. When it comes to company presentations, usually that's like a later stage where companies may present their ideas to member at an event when it comes to syndicates, or normally like to a private person when it's a single investor. Usually this process, and like when the angel investors like the company, is followed by due diligence, where there is some market screening, competitive analysis, validation of the product and IP. I mean, at that stage, most companies don't have patents and also need advice on that. And there's assessment of the company structures, financials, and contracts, check of compliance issues, and reference checks on the team. So this basically also, I have to say that most people or most companies at this stage, they don't even have these things. So this is why angel investors invest early and then advise the companies on the due diligence, which then is very important for our next phase when it comes to, for example, venture capital. After this, I would say they negotiate the terms and conditions. So it's really difficult to evaluate companies at an early stage because there is, in most cases, no financial statement that it could be based on. So basically, the value of the company is assessed. There are different, I would say, instruments or best practices how to assess an early stage company investment valuation. But in most cases, it's really a negotiation between the angel investor and the startup. And then, obviously, when it comes to the investment, it really depends on the deal. Because if you are in the syndicate, then more investors can come into this round. But if you are investing alone, it's a much easier process. And the most important part is the post-investment support, where basically the angels are usually hands-on in the companies, so they really advise the companies about best practices, about the market, about basically how to raise the next round of venture capital, how to approach customers, and all these little details that matter to the early stage companies.
Why is angel investing so important?
So, different reasons. I think the strongest reason is because angel investors are hands-on at the beginning of the company. At least most of the angel investors that I know, they don't only invest their money, but they also help with connections, networks, they help with advice. So they are really being hands-on. And for a young company, especially if there are founders with no experience, this is a much bigger value than the investment, because nowadays they can get money from different sources. Also, there are a lot of programs like incubators, accelerators. You can also get money from the bank, your friends. But an angel investor is usually an experienced businessman or mentor who can help the company in lots of different ways and save them time, basically, on making the mistakes on their own.
And just as you mentioned, based on everything what you said, investing in a private company is of very high risk, and especially at that very early stage companies, just like is the case in the angel investment process. So maybe if you could tell us a bit more about the factors leading to avoiding the risk.
So in most cases, if you do your due diligence right, you avoid a lot of risk by that. Of course, it's called angel investing and risk capital because there is risk involved, so you cannot filter out all the risk. But if you know the market, know the industry, and know the competitors and the advantage of the startup you are investing in, then you basically already eliminate a lot of risk. Also, in most cases, looking at the team and their background and the experience, that's also one of the risk factors that can be eliminated. But of course, probably the strongest risk factor is timing and execution, which is always uncertainty or an unknown when you are investing.
Okay. So what are the first criteria to focus on when you're assessing the attractiveness of the proposition to invest?
So I would say the first criteria is basically timing. If it's the right time to invest into a startup. For example, some of the examples that have been really successful companies like Airbnb or Groupon that started in 2008 and why they were tremendously successful was timing, because in that year, the crash of the market. And so Airbnb basically allowed people to rent out their flats and make extra money. So obviously that was a huge value advantage to the customers. Another example, Groupon, is a similar example where it gave basically discounts on food in restaurant and services, and that allowed people to buy cheaper what they couldn't afford that well during that time. So it was attractive for restaurants to bring in new customers into the business.
Could you please tell us a bit more about the angels organizations, business angel syndicates? What are they and what are the benefits from joining a group of other angels?
There are many advantages of joining a group of other angels. One of them is reducing the risk. So investors, when they invest as a syndicate, that means that multiple angels invest in one startup. It means that you get a greater hands-on value also from these investors. And also in terms of the financial risk, it's taken by multiple investors. So obviously there are a lot of advantages to a syndicate.
Let's discuss about the situation of angel investing in Europe. What is the average amount of angel investing in Europe?
The average investment in Europe, let's say if we break it down to different cases, so the average investment per business angel has been mostly steady since 2013, and it is around 20,000 euros. As for an investment into a company, so let's say from an investment syndicate, it is around 170,000 euros. And the average investment per business angel network is around 1.2 million euros, holding steadily since 2013, according to the statistics.
What are the leading countries in amount of invested money?
According to the statistics of the European Business Angel Network, the leading countries in terms of angel investment in Europe are UK, followed by Spain, and followed by Finland.
And how about the European Business Angel Network?
As for the European Business Angel Network, it's a network gathering 197 member organizations in 59 countries. It was established in 1999. And as for statistics in how much investment they do in 2016, they did 6.6 billion euros in angel investments into European startups.
What are the current trends of angel investing in Europe?
I would say the trends of angel investing haven't changed much since the inception of angel investing. Angel investors are mostly looking to invest into blue ocean markets, meaning like in new technologies and emerging markets which are not being penetrated by competitors yet. Currently, there is a lot of investment into fintech, which is quite growing. Year by year, also AI and machine learning. Recently, I saw many ICO investments, although I wouldn't comment much on that rather. So yeah, I would say this sums up the current trends in the market. Obviously, always when there is a new technology, angel investors try to jump early on this technology.
And lastly, from your point of view as an investor, could you categorize what type of angel investors are there?
There are many different types of angels and many different forms of angel involvement in a company. I guess when you're an angel investor, you have to ask yourself a couple of questions. First of all, how much are you prepared to lose? It's one of the most important questions when doing angel investments. On average, about 30 to 60% of angel investments lose their money. So you have to be prepared that you're gonna lose money on the way of being an angel investor. Also, even though you might have invested into a company that's being successful, there is a different timeline when you can get your money out of the company. So even though one of your portfolio companies might be quite successful, your money might be still tied up in this company for the next 2-3 years. Another question is how much time do you have available? Some angel investors are hands-on in companies, other investors are not. Especially when it comes to young companies, you have quite inexperienced management, so they need a lot of help in terms of helping them structure the company, as well as how to do business development and other things. Especially in Eastern Europe or Central Europe, you have many good technical founders, but you don't have that much skilled business developers. So, and for a company, especially in this stage, it's extremely important to get help in terms of getting new clients, entering new markets, and other things.
Thank you very much. That would be all. I hope you like this podcast, that you learned something new, and thank you, Slavo, for your time.
Thank you very much for having me, and good luck with angel investments.